Welcome, everybody, back to another exciting show of the About That Wallet podcast. I'm your host, Anthony. And for those of you who are watching for the first time, I want to say welcome to the show. For those of you who are listening and watching for such a long time, I want to say thank you and welcome back. For today on Trading Thursday, I will be kind of take a dive and try something new here today because I haven't done this before with my Trading Thursdays, which is actually to post these on YouTube. So for those of you who are listening on audio, please continue to listen and share because it does help people find me. And also for those of you who are continuously listening, I want to say thank you for sharing that out so new people can actually find me. Now, I know I am still new to this realm of investing, but I do say that I came across a new tool that has been very helpful with picking stocks and shares and see what's happening. So let's see if I can try to share my screen and see what happens. All right. So let's see here. With my screen being shared. I'm not even sure which one's being shared. We'll see. All right. So the main one I want to look here is called Barchart. Barchart.com is actually a nice, lovely website that talks about different stocks that are moving. The people shows the volume on what people are doing inside the market, and I have found it really helpful with picking options, seeing what is moving, what's not moving. And if you actually Google bar charts, unusual activity, it will take you to the stock options. Now, stock options is pretty much a short way of saying, hey, I really think that you're pretty much betting or predicting the value of a particular share of a company at a particular point in time. You can go as far out as 2 to 3 years or as short as within a few days or within a week to actually purchase these options. It's pretty much giving you the option to buy these stocks or sell them or exercise the right to purchase a stock at a lower price than what it is actually valued as. Now, keep in mind each option is 100 shares of that particular stock. So when you see the pricing here, so just for an example, I just went to the website today. As you see, it is APPL, which is Apple. The price of it is $124.97 per option. And they're looking at a strike price of $150 with the expiration date of September 17th, 2021. Now, this is pretty good option. However, when you look at the price of it, the asking price for this particular option is $1.80. So if you take 100, I mean, take 100. If you take $1.80 times that by 100, it comes out to be $180 that you'll be coming out of pocket to purchase this particular option. And it seems as though the open interest for this particular one, and the open interest, for those of you who are not familiar with this particular concept, means that this is how many people have purchased or how many options have been sold today. And when it comes to the volume, that means, I'm sorry, I said that wrong. No, I'm right. So the volume is how many is actually being held right now with the open interest. So this is the reason why it's very important to understand the difference between open interest and volume. Some people trade based on volume, some people trade based on open interest. So this is something to think about when you're actually looking into buying options. Now, come on down. I'm gonna just kind of scroll through. Tesla's been pretty high out there. So right now the price for Tesla is $571.69 $571.69 with and people are looking at the put option, which means that they think that the stock is going to drop. And they have right here, and I'm surprised this is unusual, but it is kind of intriguing that someone will pay $1,300 to bet that Tesla will stay under $580 for tomorrow, actually, which I think is interesting. So I wonder how many people are going to lose their money. Actually, it looked like quite a bit of them. So about 13,000 people could possibly lose their money come Friday. It's going to be interesting because Tesla did say that recently they're going to stop the ability to allow someone to buy Tesla using Bitcoin or any type of cryptocurrency. So that is going to be very interesting on how the market is going to react to that. But one of the things I want to draw attention to is Neo. Neo has been steady, but it has also been around the $40 range. But a lot of these, what they call it, a lot of these bids for these options are for tomorrow on the 14th. Let's change these expiration dates a little bit. Kind of go out some and look at something a little further out to like 2023. So a lot of people right now, this is hilarious. So if you look at it, Tesla's price point, even though right now is valued at $571.69, and they looking at the strike price to hit. So this is a call option to hit $1,100 by June 16th, 2023. And the midpoint bid for this is a solid $1,000. And already 900 people, well, 908 options have been purchased to look like today. Yeah. When it comes to the open interest. So today is 429 people have actually, well, options have been sold, which is crazy. So it's really interesting on seeing how many people are going for long-term calls for particular stocks. Now, keep in mind, this is just one particular tool. However, this is one powerful tool. And a lot of people use this tool when they look into options. So when it comes to option trading, please be careful. If it comes up to your strike date or the expiration date and you did not sell those options, that value of that particular hold will be $0. Or actually, if you're in the money, which means that the price of the actual share is higher than the actual strike price. And that means that you're actually in the money, which means that you get the option to exercise your right to buy those shares at 100 at whatever value that you have. But keep in mind, one option call is 100 shares. So if you think about it, the options are a lot cheaper than actually buying the stock itself. Because if you think about it, 100 shares of Tesla that you're getting at $1,000 to own 100 shares, and you get that option to purchase, that is amazing. But a reason why a lot of people are doing long calls right now is because we all know that the market bounces back in long term, usually dips in the short term. So what most people do as a strategy is to buy buy options when they are like the buy call options when they are low, like right now. So consider the sale. So if everything's on sale, and then the value of those calls will actually drop as well. So these are one of the things that you want to think about when you start doing option calls. Now, so that's it about options. I just wanted to kind of share that with you all today. Now, I'll actually want to start talking about what's been going on in the market. So let's take a look here at the market. And let me change for this to number 2, share. All right. So always good old buddy Google here. And we're going to say the market. Google market. If I can spell today. All right. This is actually pretty cool to kind of try to use this stuff. I never actually did this. I'm actually surprised that it's working. Stock market. I'll probably edit out some of this dead airspace, but I'll probably keep it in because I want to keep it real with you all, give you all the information here and all my mess ups, all my slip ups, because I'm a real person. I mean, I could sit here and edit everything out, just give you the information and you go about your day, but you can always speed through. It's fine. All right. So with Alphabet, Google looking like it's $2,229. But nah, it's not really much going on. All right, let's go to my top stocks anyway. I'm not gonna try to look for the main market stuff because last been averaging. All right, so let's see what we got with Tesla today. If I can spell Tesla stock. So Tesla stock right now, as I mentioned on Barcharts, which was $571.69. Keep in mind, I actually bought Tesla back when it dipped down to $580 last time back in early March, and then it shot up to about 700. Now it's dipping down with a slow dip down to 570 again. So we've seen this dip before. Now, some people consider it is usually a W approach. Now, if you look at back at it 6 months ago, which we are people who are looking at this on YouTube, we'll see that uh, just 6 months ago, November 16th, it was at $408.09. Now it's sitting at $571. So technically, it's still up overall. If I could just drag this over. So it's still up about 40% if you purchase back in November. So no worries, just stay hold. For those of you who purchased back in January when it was at like the top of the peak, you're about you lost about 32% of your income right now. Well, this is just a value. You didn't lose anything until you sell. So remember, you did not realize those gains or losses at this point. Now, the next one I like to talk about is Neo. Neo is sitting at 90, I mean, is sitting at $31.22 over the past 5 days. You're looking at a loss of 16%. Still not bad overall. Remember, these are long holds. Neo is still making some changes. So it'd be interesting to see what they can come up with going down. And as China is wrapping up uh, their production, but also keep in mind with the chip shortage, and also here in the U.S., there are things that is not looking good right now as far as like shipments, because we have the for one, the gasoline pipeline been hacked and actually slowed down production with oil for quite some time. Plus, there was also a shipment that was happening with the Suez Canal when there was a blockage of one of the shipping containers. Then, once that was cleared, you also have a lot of shipping containers still waiting at sea to be docked to be unloaded. So that is still happening. So everything right now is really on delay. So if you need to get something now. If you think you need to get some laundry detergent, need to get some sunscreen because that's about to come through. Chick-fil-A is not now even giving out one sauce per order. So you need to start thinking about how you are actually going to navigate your life now as people are getting into that scarcity mindset again. And that's a scary thing when people get into the scarcity mindset, because once they get there, it's hard to try to think how to get out or get back to um, that abundance mindset where things will work themselves out and will be okay. All right, so let's keep moving on with some stocks here. Love this company. I just really hope they can get back on the road. Is GoGo, which is the in-flight company, broadband service. I really hope that they can pull through. Let's see, looking at just a 5 day, they've gone from 1028 to about 11.49, which is right now, and it's about a 6% increase. I've actually did pretty good with that one, so I just staying buying the dips, just keep it moving because a lot just has been happening. All right, everybody. I think I don't want to keep this show going too long because I've talked quite a bit. You've been listening to me patiently as I go through these, and hopefully, going forward, I'm gonna try to have a little bit of more what they call them things, a format, a flow to these trading Thursdays because some of you have expressed that you want to talk about Bitcoin. Some of you uh, expressed to me that you guys are doing well with Bitcoin. So I'm gonna dive into Bitcoin in these coming weeks, learn about NFTs, how they could be utilized in the future, and I also want to talk about how the Bitcoin is not considered the gold of the cryptocurrency because it's not regulated and so forth. So I think with the deregulation or the decentralization of um, crypto is going to be hurtful once governments are trying to centralize crypto. So be on the lookout to see how the different things that crypto is going to be used. I really have, I'm going to predict this, but I don't think it's going to be true. Say maybe within the next 5 years. I really think that our like government issued IDs, not government issued, but more so the licensing of our IDs are going to be coming forward so that all of our driver's license, our IDs, all of our phones, everything like that will be an NFT. Now, because the way how NFTs are right now being used for baseball cards is as a test run, and also they are being used for different types of art. Now, if you think about it, our driver's license is art. Somebody took the time to draw out the logos for the state that you live in. Somebody took time to place everything the way how it's displayed, where our IDs, where our photos are placed, and everything. So, as that being a form of art, each ID that's being listed out there can technically be a NFT because it's all individual, individual user, and I really think that that's going to be the way. Maybe in 10 years, I really think we might have QR codes, obviously, not obviously, but maybe QR codes tattooed on ourselves. So on our hands or maybe on our necks somewhere, where if we need to be scanned, all of our information is there. There is no need to kind of think anything less. So I would say just keep you on the lookout for that. I think that is something that could be scary at first, but I really think that's the way we headed in the technology space. And when it comes to investing, I want you to try to think ahead. Think of the long term game. Do not think about the short term gains uh, in gain in all of this. And oh, because it is tax season, I want to throw this out there because I just found this out and I was researching it, was that if you lost more than three, the only thing that you can claim on your taxes, if you lost more than 3,000, up to $3,000 can be uh, captured on your taxes, which I thought was really important. So for those of you who have an accountant, make sure that they are putting in your investments from last year so it can show your loss and or your gains from last year, because during the COVID, a lot of people could have racked up some extra expenses, could have lost some expenses. And also this could put an additional $3,000 into your account. Now, for those of you who lost more than $3,000 in the stock market last year, you can actually put those claims as well, but you actually have the option to carry those over to the next year. So if you lost, say, 30,000, you're able to write off the 3,000 or take advantage of that particular tax code, roll that additional 27,000 onto the next 9 years. So you can continuously roll that down the drain and kick that down down the road. Now, the cool thing about it, if you know this as an investor, then you can imagine on how many other things that are out there as a W-2 employee that you can actually start bringing in some extra funds. So if you wanted to say modify your W-4s to kind of counteract that that loss in the stock market by additional $3,000, imagine having an additional $3,000 in your pocket today instead of waiting next year saying, oh, well, you know, I lost all this money. But if you think about it, that's how the rich do it and the wealthy. They actually sell off a lot of their stuff when it comes to the end of the year because it makes sense. So if you think about it, look at your history. Every time around the last week or so in December, the stock market would dip. Then come January, it skyrockets because all they did was just kind of realize their losses, took that hit because it's calculated for their taxes. And then once it's done, they put it right back into the market just to kind of get those gains and bounce everything right back up. So I want you to kind of think about that as you go forward, everybody. All right. So I'm going to sign off here. Thank you again for listening. This is the About That Wallet podcast, and I am your host, Anthony. So take care, be safe. I'm out. Peace. Hit the stuff.